There are hundreds, if not thousands of indicators that a trader could try to use to find an edge in the market. But there is only one indicator that every trader needs in any market you're in, because there's only one indicator that's going to give you the direction of the market. There's only one indicator that will help you see the market cycle. And there's only one indicator that has the absolute best entry opportunities. And this indicator is the only indicator that any professional trader will ever need. Let's go deeper. Hey guys, JD here. So if you watch my previous video for any amount of time, you would probably say, hey, this dude hates indicators. But that's not truly the case. It's not that I hate indicators. I hate when people are taught to put too many indicators on their chart. Okay, so I prefer to trade with a very clean price chart so that I can read the price chart. Not only that, in my personal experience, right? I've been doing this 15 plus years now. I read a lot of books. I went to a lot of seminars, and the big gurus of the times had me using 5, 6, 7 indicators, and I was losing my shirt. Okay, so because of that, I have an aggressive tone many times when we're discussing indicators. But there is one indicator that I have been using for the past 4 years that I absolutely positively cannot live without. I mean, positively cannot trade without. There's one indicator that every trader needs in your arsenal, because there's only one indicator. I'm not gonna say that. This one indicator, let me say it like that. This one indicator gives me everything I need. Okay, so people try to ask, I know. Okay, this one indicator gives me everything I need. It gives me the direction of the market. It allows me to see the market cycle, and I've said it 1,000 jillion times, the best entries are on, off, or around the 21 EMA. Okay, so in this, I'm gonna actually turn this into a series. All right, and so today we're gonna talk about market direction, how the 21 exponential moving average gives you the direction of the market. And it's one of the only indicators you need. Right now, it's all I'm using. I have a very clean price chart and a 21 EMA. It's all I need because it gives you everything. Okay. And so recently people have been asking me, like, somebody say, hey, where'd you get 21 from? It's what I was taught. Okay. I don't have any rhyme or reason to it. Nothing mystical that I know of. It just happens to work. Okay. And not only does it work in binary option, it works in future, man. I mean, it works in futures. If you guys have seen my future shorts that I've been putting out, it works in futures. It works in the Forex. It works in binary options. It works on a day chart, 4-hour chart, 15-minute chart, 1-minute chart. It doesn't matter. Slap a 21 exponential moving average on your chart. Okay. And then it's going to give you the ability to accurately read that price chart. And that's why I use it. That's why I love it. That's why I swear by it. It's the only indicator you need. To me, it's the most powerful indicator out there. All right. And it's very simple. All right. It's one line, right? If you can learn to follow one line, that makes it very easy for beginners. Okay. It makes it very easy for beginners. Seasoned traders, it's wonderful. All right. And so if you've been using a lot of indicators and you're losing, okay? If you have been using multiple indicators and you are still struggling, if you've been using multiple indicators okay? And you still feel like, boy, I got in late. Because see, that's the thing. Most indicators are lagging indicators. They don't predict the future, which is what you really want your indicator to do. Give you a clue at least of what's probable to happen next, right? That's what you really want your indicator to do. That's what everybody's hoping the indicator does. But most indicators that people use are lagging indicators. So the indicator reads the chart, but it's reading the past price action. And so by the time it gives you a go signal, many times you're too late. So if you've been having that feeling of, man, it seems like I'm getting in too late, it's probably because you're using a lagging indicator. All right. But the 21 exponential moving average, it really helps us see what's currently going on. Okay. And it's not perfect, right? But once you learn how to read price action and use that 21 EMA, you will see, okay, that it is the only indicator you need. So today we're going to go to the charts. All right. And I'm going to show you today in this video how I use the 21 EMA to determine the direction of the market, because here's the deal. The market can only do three things, people. It can only trend up, trend down, or go sideways, which is a range. And if you can't identify what the market is currently doing, you're dead in the water. Okay. So understanding the direction of the market is a little bit more than important. All right. It's a little bit more than important. So we're going to go to some charts and I'm going to show you how the 21 EMA is all you need. It's all you need. I'm not going to even spurt out any other names of indicators that's supposed to be for direction or telling you when something's oversold, telling you when something's overbought. Scratch all that. If you can understand, if you can see, okay, if you can see, then you can put a 21 EMA on your chart and it will tell you which direction the market is going. It will tell you what the market is currently doing at a glance. At a glance. It's nothing that you almost don't have to study it, okay? I'm gonna just give you the three prerequisites before we even go to the charts. If it's above the 21 EMA, more than likely we're in an uptrend. If prices are staying under the 21 EMA, more than likely we're in a downtrend. If the 21 EMA looks like a roller coaster, we're in a range. We're in a sideways market. Okay. So those are the three things. Those are the three ways to tell what market conditions are currently happening with the 21 EMA. So let's go to some charts so we can look deeper. All right. So, hey, but before we do, this is a great time to like, share, and subscribe. I greatly appreciate you. Keep the comments coming, please. It really helps the channel. Please, if you're digging what I've been putting down, hit that like button right now. That really helps the channel and I greatly appreciate it. All right, let's get to the charts. All right, guys. So we're on some charts. So let's just read some price charts, right? Look at this. See this roller coaster action? What's happening? We're in a range. All right. So at this point here, prices is currently ranging. So if you were to box it up, we could say that's the top. This is the bottom. So at this point, we're currently ranging. All right. So when you're in a range, you take range phase. So you could have took any of these entries off the bottom, any of these entries off the top. That's how you trade a range, right? But then here, we get the breakout pullback entry right here. Boom. Now what's happening? Prices are under the 21 EMA. So this is a quick little downtrend. We're in a downtrend. So once you notice this, once you just glance and see that, hey, prices are consistently staying under this line, we're in a downtrend, you look for nothing but shorts. But then you get a very strong push up right here. Okay. So now at this point, you can't just keep looking for shorts because we're back above the EMA. So you got to kind of wait and see what happens. Then you get this big push up here, this low push up, higher low, beautiful entry right there. Hey, now you got to say, all right, we're probably going to start trending up. And we do. We stay above the 21 EMA and boom, now we're trending up. All right. So look, you got a range, a small downtrend, small uptrend. the direction. The 21 EMA gives you the direction. All right. So that's just a beautiful thing. And I don't want to jump the gun because this is for the next video, but look at this: trend up, trend break, retest new high, market cycle. Anyway, then moving on, you see we got back under the EMA again. This is all downtrend, right? So here you're just looking for nothing but shorts, and there's a whole bunch of entries: push up, first entry, push up, second entry short. Then it did it again right here: push up, first entry, push up, second entry short. Then push up, just kind of, then you got a high, lower high, just goes right there. I mean, there's tons of entries here: high, lower high off the EMA. You can go right there, and then got to the low, push up, first entry, push up, second entry short, go right there. I mean, you just trade the trend, right? So entries, that's another lesson for another day. This is supposed to be almost just direction, but I can't help myself because price action gives us these entries each and every day. And when you understand the direction, then you know what setup to look for. That's why understanding the direction is so important. Okay, let's just go somewhere else. All right, here we go. We're on the AudiCast. So right through here, what are we doing? We're ranging EMA straight across. We're ranging. But then once we get above the EMA here, this is a sign that this strong leg here, we're above the EMA. This is your first sign that we may start trending up. Tried to come back, couldn't. This low is higher than this one. That's another sign we may start trending up. Then it tried to come back short again, but look, this low is higher than this one. That's another sign. So once we get back above the EMA, you can pretty much, you know, start to think, all right, we're probably going to start trending up. And then once you start staying above the 21 EMA, we're in an uptrend. So right here at this point, I already know we're trending. Once we broke higher, actually right here on this candle, I would have knew. Once we broke higher than everything here to the left, trend time. Then look at that. Look at that. So what do? You do nothing but buy. And where are the best entries? Off the EMA. Boom. 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 Off the EMA. I can't make this stuff up. All right. The 21 EMA is it is absolutely positively your best friend. Okay. It gives you the direction. Then look, roller coaster. Hey, either stay out of it or trade it as a range. Tried to go lower again, couldn't, and then back to the trend, because what we're really having here is a trend up, trend break, retest a new high. Man, I love price action. So let's keep on looking. All right, what's happening here, people? What's happening here? We're above the 21 EMA. So what are we doing? We're trending. All right, we're trending. All right, so we trending, came back, trend continues. Look at this. Where are the best entries? Off the EMA. Boom, off the EMA. Boom, off the EMA. Boom, off the EMA. I keep going to that. This is only about direction. Let me stay focused. Let's go somewhere else. I just can't help it. The price action is so simple. When you see the 21 EMA, what's happening here, people? We're above the EMA. What are we doing? We're trending up. What should you take? All longs. Should you take any shorts? No, you shouldn't. Why? Because the 21 EMA is clearly showing us that we're in a uptrend. So you see how by reading the 21 EMA, you eliminate, there's only three things that can happen. And when you see the 21 EMA, you can eliminate two of them, which helps you know which way to trade, which helps you know which trades to look for. Okay, so we're above the 21 EMA. I'm going long. I'm looking for all longs, period. All right, let's go somewhere else. Here, what's happening? Hey, we got a nice little rangy market, but the lows ain't hitting at the same top. The tops ain't hitting at the same point. I'll just stay out of that. Too messy. Here we go. We're trending down. Clearly, we're under the EMA. This is a downtrend. Tried to break higher. Nope. This is basically a second entry short setting up. Getting back under the EMA. We're probably going to come test this low. That's what's happening. Downtrend. Don't go long. Here, another beautiful uptrend. Hey, it's a trend day today. Trend day today. Let's go to some stocks, see what they're doing. What you doing, Apple? All right, Apple. We had a little range going here. Look at the roller coaster. We broke out of it, started to move up. From a big scale, this is a push down, first entry, push down, second entry long, but sorry. I can't help myself. Anyway, this is a trend up, right? This could have tricked you right here. but then the trend continued, because that's really just a trend up, trend break, retest a new high, perfect market cycle. But look at this, it's just, we're above the EMA, take all longs through here and you can't go wrong. Now we're staying under that EMA, probably about time to take some shorts now, you know, because, and when you really learn how to read the price chart, you will know that this market cycle is over. So this is doing exactly what we expected to do. Now it's going to trend down, trend break, retest a new low. Price action. American Express, what you got going on? Kind of messy. We was under the EMA, but I mean, look at all these wins. If you just recognize that we're standing under the EMA around here, all these wins you could have got, all these wins you could have got. Then, hey, this thing took off like a rocket going back up. You might not have got much in here, right? And now it's trending down again. So that one was that was a big chop. Okay, look at this Facebook. Once you break higher than this point right here, you're trending up, right? We're standing above the EMA. Take longs, take longs, take longs, take longs, take longs. Then it broke back pretty hard, but now it looks like it's trying to retest again to make a new high here. We're back above the 21 EMA. 21 EMA, people, 21 EMA. Just for as another tip, you keep taking longs until you get this break. Once you get this break, then you sit on your hands. But as long as prices are staying above that 21 EMA, we're in an uptrend. It gives you the direction. The 21 EMA absolutely positively gives you the direction. What's happening here? We're clearly ranging. We got a roller coaster ride going on. Right now, we just made a high, lower high. I'm going short right there because we're probably coming to the bottom of the range, which is somewhere down here. The 21 EMA helps you trade. It gives you the direction of the market. This was a beautiful downtrend. Tried to go higher once, twice, 3 times, couldn't do it. Trend continued. Trend down, trend break, retest a new low. Perfect market cycle. But again, if we're under the 21 EMA, we're in a downtrend. If 21 EMA is looking like a roller coaster, we're in a range. Then if it gets back under it again, trend is continuing. That's perfect price action. The 21 EMA allows you to see the price action, but for the purposes of this video, it gives you the market direction, and you have to know the direction of the market. You know, this one, we was above it, it's an uptrend. Up, we're under it, it's a downtrend. It gives you the direction. You don't need any other indicator to get the direction of the market. That's really what I want to get across in this video. Go to crypto real quick. That's really what look at this beautiful uptrend. Look at this. Once we broke higher than here, we're in an uptrend. We're in an uptrend, and it was a beauty. Now, what else do I need, right? What other indicator do I need to add to this to be able to tell that prices are going up? I mean, keep it simple. Sometimes we just make things so complicated. What else do I need to tell me that prices are going up? I got a bunch of greens in a row. I got the 21 EMA pointing straight up. I got prices above the EMA. What else do I need? What other confirmation do you need other than your eyeballs? Okay, use your eyes. This is why trading is simple to me, because I use my eyes. I see what's there. I let price action tell me what's there with my naked eye, and I use the 21 EMA as the confirmation. If this thing is pointing straight up, you're in an uptrend. Okay, now it's kind of starting to turn right here, pointing kind of down. Yeah, we're headed down now. You know, it's that simple. It's that simple. If you want to know whether you're in an uptrend, a downtrend, or a range, put a 21 EMA on your chart, and it doesn't matter the time frame. Look at this. We got above 21 EMA. We're clearly trending up. Tried to go lower, but came right back again for trend up, trend break, retest a new high, which we're going to discuss in the next video. All right. So in this video, there it is. If the 21 EMA, look at this, we're under it. That's a downtrend, small range, trend continued. And that was a beauty. Look at that. We're under the 21 EMA. Keep going short, keep going short, keep going short until here. Then you sit on your hands. So for a recap, if the prices are above the 21 EMA, you are in an uptrend. If prices are steadily staying below the 21 EMA, you are in a downtrend. And if the 21 EMA looks like a roller coaster, you are in a range. Okay. And so that's the chart lesson for today. And that is how the 21 exponential moving average helps you see the current market condition, helps you see the current direction of the market. And once you know which way the market is going, now you know how to trade it. All right. So that's why this one indicator is the most powerful indicator in trading. All right. So, hey, this is a great time to like, share, and subscribe. I greatly appreciate everybody. And stay tuned. This is part 1 of a 3-part series. So come back Wednesday for part 2, where we will be discussing how the 21 EMA allows you to see the market cycle, which is a major key to successful trading. All right. So I'm going to sign off with that. My name is JD. And as always, I wish you increase on the Sutton. Bye-bye. If you want to learn price action trading, you can visit www.jdhyder.com, where you will find the IOTS price action trading system, which is the course that you need to begin to increase on the Sutton.